So 6 months ago, I made a decision that changed the trajectory of my entire life. In March of 2025, I bought an investment bank at the age of 28. I don't mean that I worked at one or invested in one. I mean, I became the owner of a fully licensed and registered private placement focused broker-dealer. Currently, it has a $1 billion transaction in deep due diligence expected to close in late 2025, in addition to several other multi-8-figure deals that are on the line and over $50 million in total fees tabled. But here's what's really gonna blow your mind. Not only did I not have to work a single day in the operations of the business because of how I structured the team and the systems, I'm already stepping away to build my private equity firm, which my mentor and I are currently in R&D for. And the crazy part is, I never went to Harvard Business School, and I don't come from a wealthy family with connections. I didn't go to a fancy prep school or anything like that. So I'm making this video for you, not to brag or be boisterous or egotistical, but to illustrate how you can replicate the same results by following this blueprint. The exact same blueprint that built BlackRock from a risk advisory shop into a $10 trillion empire, and the same playbook that turned Blackstone into a $1 trillion firm from a small boutique M&A advisory shop. In addition to that, countless other investment banks and wealth management firms followed this exact same trajectory. So if you're running a 7 or 8 figure business right now and you know there's something greater beyond what you're doing right now, and you're looking to start deal making, applying yourself to a vehicle with higher leverage, maybe go into private equity, whatever it may be, or you're currently working in finance and you're tired of seeing the partners make more than you even though you're doing all of the heavy lifting in the firm. If that's the case, then I'm going to show you exactly how you can take the same playbook that I stole from Steve Schwartzman of Blackstone and Larry Fink of BlackRock and use it as your blueprint to create wealth. Now, I've termed this playbook the advisor to principal playbook. See, nobody tells you this about building wealth in finance. Everyone's focused on the wrong game. They're either trying to climb someone else's ladder for 20 years, hoping to make MD at Goldman or JP Morgan, or they're jumping straight into deals with no idea how institutional money actually thinks, operates, or moves. The simple fact of the matter is both of these paths are broken. Now, the advisor to principal playbook is different, but first let me break down what advisory actually means. When I say advisory, I'm talking about 2 core services that investment banks provide. The first is private placements. This is capital raising. Say a company needs 10 million, 20 million, 50 million or $100 million. When companies raise equity, they need someone who speaks the language of institutional capital, someone who can package their story, structure their deal, and get it in front of family offices, private equity groups, VCs, pension funds, etc. Or when a company needs to reorganize their capital stack, refinance debt, or secure a loan from private lenders, same thing applies. That's what we do. We're the bridge between companies that need capital and institutions that deploy it. Now, the second is M&A advisory. This is helping companies buy, sell, merge. You're the strategist, the negotiator, the one who knows what buyers actually want, what they're going to pay, and what something's actually gonna sell for. Now, there's more than these two. For instance, BlackRock started off as a risk management firm, but for the purposes of this video, these are the 2 core services that we're gonna focus on in this video and the ones that we're gonna be talking about. But here's why this matters. Every single one of these services puts you in the room where real money decisions get made. You're not watching from the sidelines. You're architecting deals, and every deal teaches you something priceless. Think about what happens when you raise $50 million for a healthcare company. You're sitting across the investment committee at a $10 billion family office, and they're grilling you about unit economics, market dynamics, competitive moats. You learn exactly how they think, how they move, or you're negotiating terms with venture capital firms. You discover how they think, what makes them say yes, and what makes them walk. You're structuring securities, preferred equity, convertible notes, senior debt. You understand how sophisticated investors protect their downside while maximizing their upside. That knowledge, that's worth more than any MBA because you're actually learning in the trenches as opposed to theory, as opposed to some extrapolation of what reality is. And you can work in advisory without going to school or having any prior experience. And here's the kicker. They're paying you to learn this. You are literally getting your tuition paid for, not only paid for, but they're actually putting money in your pocket so you can learn how this advisory business works. These advisory fees will range from $25,000 to $250,000 on the absolute high end. That's what Goldman Sachs will charge as a retainer when they bring on a client, and then 5 to 10% success fees on capital raised. You raise $50 million, that's $2.5 to $5 million in fees. All right, now let me take you back to December of 2024. I didn't just pay for the licenses and registrations. I inherited the entire team of battle-tested professionals. Series 7s, 82s, that's your securities license, which allows you to go out and sell. Series 79s, which is the investment banking license. This is the one that allows you to structure and price deals in M&A and capital raising transactions. Series 24s, those are the principals who supervise the entire operation. Now, in addition to that, I also brought in my mentor as chairman. Now, this guy, he's moved billions of dollars over the 40 years that he's been a banker, including a $3 billion spinoff fund for BlackRock. I also brought in my own sales team, hungry closers, and taught them the banking side. We built AI-powered systems that identified companies raising capital using intent signals. We created proprietary grading algorithms that score every single opportunity based off market size, team quality, deal structure, timing, as well as a plethora of other criteria that we grade our deals on. And if it doesn't score at least 17 out of 20, what we consider to be a tier 1 deal, which we have a very high degree of certainty we're going to be able to close, we don't touch it at all, because you can either make a few $100,000s a month in this business by taking on any company that'll pay you a retainer, or you can be hyper selective with the deals that you take on and make 8 or 9 figures. So obviously we focused not just on the deals, but sectors and industries. There's 4 sectors where we have a unique and unfair advantage in: healthcare, real estate, deep tech, and oil and gas, where my chairman spent 40 years of his career in. And since we started originating deals back in March, every single one of the live deals that we have is in diligence. Over $50 million in fees locked in for 2025. And that $1 billion transaction that I referenced at the beginning, that's gonna be closing in Q4. So here's what makes private placements the perfect entry point: speed. M&A deals usually take 12 to 24 months to complete, but private placements can be 3 to 6 months. Faster cycles mean more fees, more learning, and more relationship building. The next is relationships. Every single capital introduction that you make for your client, you now have that person in your Rolodex, and those relationships compound. The family office that you meet on one deal, although they may not invest in this particular one, might invest in the next one. The next is intelligence. You see every deal in your sectors, you know which companies are crushing it and which ones aren't. You know what valuations make sense, you see trends before the market does, and the next is capital efficiency. You don't need millions to get started. You need licenses, relationships, and the ability to execute. And the fees from your first few deals will fund your entire operation. But here's what separates the players from the owners. Because you see, the broker-dealer was never the end game. It's just the foundation, it's the learning laboratory, it's the cash flow engine for what comes next. So now, while the fees roll in without me touching any of the operations, my mentor and I are now architecting the next phase, our first fund, and the target is $100 million by the end of 2026. The same relationships, except now those LPs who we essentially were getting paid from for placing capital for our deals, they're now going to be writing checks for our fund. Same deal flow, except now we're not just advisors, we're the ones that are the actual principals. And it's essentially the same process, except now we get to keep the upside, not just the fees. So over the next few minutes, you're going to learn the 7 steps to replicate the advisor to principal playbook. The first is the exact 90-day playbook to take you from zero to running your own investment bank or advisory shop. Second, I'm going to show you how to find a distressed broker-dealer and negotiate an acquisition like I did, or set up a branch office or an OSJ with another broker-dealer. And I'll tell you exactly what that means when we get to step 2. Now, step 3 is the exact team structure that I put in place to allow the business to run without you. 4, why private placements beat every other advisory model. 5, how to systemize deal origination, execution, and closing. 6, how your first 2 or 3 deals can fund your entire infrastructure moving forward and propel you into the next step, which is transition from the advisor to the principal. Now, this isn't theory. This isn't something that I learned in a book. I learned this from real hand experience, learning by doing. This is exactly what I did, documented, and the path that I followed so you can copy it in real time. Now, before we get started, my compliance and legal team requires me to share a few important disclosures with you, and honestly, this is for your protection as much as it is mine. The results I'm about to share, the $50 million in fees, the billion-dollar transactions, acquiring a broker-dealer at 28, these results are not typical. I'm showing you what's possible when you follow this process with the right circumstances, but I'm not guaranteeing in any way that you're going to be able to make money with this or replicate my success. These specific results required exceptional market conditions, substantial capital, world-class sales and marketing skills, and factors that may not be replicable. Your results will entirely depend on your own skills, effort, capital, connections, and numerous other variables outside of anyone's control. This presentation is for educational purposes only. I'm teaching you about a business model. I'm not providing financial advice, investment advice, legal advice, or any other kind of professional services. Most importantly, the securities industry is heavily regulated by the SEC and FINRA. You absolutely cannot engage in broker-dealer activities without proper licensing. This means individual FINRA licenses, firm registrations, state approvals, everything must be done by the book. Attempting to operate without proper licensing is a federal crime with serious potential consequences. Any earnings or income examples are meant to show what's possible, not what's probable. Most people who attempt this will earn significantly less or potentially lose money. Before taking any action based on this training, please consult with qualified legal and compliance professionals who specialize in securities law. That out of the way, let's dive into the actual training. All right, so starting off with step number one, which is the 90-day playbook on how you can set up your investment bank and bring on your first few deals, as well as structure your entire team. Now, the very first step here is obviously licensing and compliance. So what you immediately want to be doing, if you haven't gotten this already, is study and practice for your SIE, your Securities Industry Essentials examination. The next thing that you want to be doing is getting your state licenses. So this is your Series 63. And then what you can do, if you decide to go into private placement work, is write your Series 82, which is where you get set up with a broker-dealer. Now, what you can do is you can easily run some ads to find a distressed broker-dealer. Many other broker-dealers that exist out there in the United States, they focus on selling securities to retail. But now you have these massive retail shops like Robinhood that charge essentially zero fees. So they're putting all of these other broker-dealers out of business. And FINRA actually wants to incentivize broker-dealers to get back into the space. So what you can do is you can run ads, you can run cold outbound, running LinkedIn and email to find distressed broker-dealers that want to sell. The other thing that you can do is set up what's referred to as a branch office or an OSJ. Without getting into too much detail, this is basically where you are running your own advisory shop under the umbrella of an existing broker-dealer. There are broker-dealers like Finalis, there's Marco Polo, GT Securities. There's a plethora of other broker-dealers that offer platform services that you can get set up on. Now, when you have identified the path that you want to go down, that broker-dealer can sponsor you to write your Series 82. All right. Now, at this point, once you've written your 82, you're then going to go and pay for all of your state license registrations. So actually getting licensed in all the states, which means that you can transact both with issuers, the actual companies that are issuing the securities that you can then go out and sell to investors or QIBs, qualified institutional buyers, or accredited investors or institutional investors. There's many different names for them in the individual states. In order to be a true investment bank, there's a few key roles that you need to place, which segues into the next step. But to be a true advisory shop, a true investment bank, you need to have a few key roles that you place inside of your operation. So this would be your Series 24, this is for compliance, and then your Series 79, and then maybe a few other reps. Now, I'm gonna get into detail about how I structured my team, but this takes us to the next topic within this 90-day blueprint. Now, you essentially wanna be doing all of these steps concurrently. You wanna be taking massive, ruthless action. I have folks that have set this up within 90 days. They've already signed 9-figure deals that they're working on. They've gotten licensed, and I've had guys that are able to close transactions within that time frame. I've done it myself as well. So the next topic is creating your dream team. The way that I think about this is leveraging other people's experience. So I go out and I find guys that have 40 years investment banking experience and billions of dollars in transactions, like my mentor. And what this does is it allows me to not only know which industries I can focus my deal origination efforts on, meaning my sales efforts to bring clients in, but also how to structure, how to sell, and how to actually consummate transactions in addition to relationships with capital partners or counterparties, the people that actually put money into a deal. Now, you want to have several advisors on your team to really bolster up the perception of your firm. The next thing that we're going to do is warm up capital partners. So let's say you find an advisor that has 20 years experience and several $billion of transaction volume in manufacturing. Well, you're going to go and find family offices that made their wealth in manufacturing, or private equity firms that are consolidating in manufacturing, or any other kind of investment firm that has an appetite in that space. You're going to figure out what their buy box is and what sorts of deals they want to allocate capital to in the next 12 months. So once we have these pieces in place, we can actually go out and start originating deals. Now, there's two main methods that I use. The first is outbound on LinkedIn. This is incredibly powerful. You can use a combination of automation tools in addition to running cold outbound manually. Now, a pro hack here is using GPT voice to text, explaining exactly what you're looking for and asking the results to give you Boolean searches for both keywords as well as titles, and then taking that response that GPT gives you, putting that into Sales Navigator, and it'll give you a very granular list of the kinds of individuals that you want to be targeting. So this would both be on the capital partner side, but also for the context of this step, finding companies that would be looking to raise capital or exit or merge or whatever it may be. The next would be cold email. So there are incredibly robust cold email infrastructures that you can set up in this day and age. And I'd recommend you go out and build yourself one, because the amount of leverage that you can get with these is unprecedented. You can fill up your calendar with companies that are looking to raise capital or that are in need of advisory services. And this is how you would win your first few mandates, actually close your first few upfront deals. Now, I just touched the surface on the complexity and detail of what's required to execute on this 90-day time frame. But I promise you, it's possible in 90 days. So I made a whole video that breaks this down. I invite you to go and watch that video as soon as you're done watching this one, because it's gonna give you more detailed steps on how you can actually execute on this 90-day time frame. All right, so now let me break down the team structure. So at the very top, you're gonna have a managing principal. This generally is gonna be someone that holds all of the licenses, Series 7 or 82, as well as Series 79 and a Series 24. This person ideally can be both compliance officer as well as managing principal. They oversee the entire firm. Now, you don't need to take the main position within the firm. Your focus can be on placing talent and building systems. This individual can now run the operation for you. The next person that I would bring in is a general counsel. So this would be a securities lawyer that you have either on retainer or on a profit share that will advise you on all of your transactions as well as conduct the diligence on all of the deals. You're required to have a FinOp. This is essentially a financial operator. This is the equivalent of a CFO. This person will run all of your books for you and make sure that you are above net cap so you don't run into any issues with FINRA. All right, now we get into the good part, the sales reps. So here's where everyone goes wrong. You do not need to hire guys with finance experience to be sales reps within your organization. What you want to do are hire actual closers, guys with high ticket experience, and then train them on the securities and on the finance side of things. So what we do is we essentially say, look, you need to go and write your Series 82 before you can take any calls. We need you to quit all of the other roles that you're currently working on. You're gonna focus on this, but I promise you, within a few months, you are going to be making tens of thousands of dollars a month, which is better than a salary that you would get if you started working at a bank. Now, you want these individuals taking the sales calls with companies first. These are the issuer calls, companies that are looking for advisory services. The deals will range from 25,000 up to several six figures. So they're smaller deal sizes, and you incentivize them by saying, look, you're gonna master this first, and then what you're gonna do is you are then going to run the actual live deals. So you start training them on the front end, and then you eventually transition them to the back end where they're managing the sales reps on the front end, and they end up working in pods. Now, this is the absolute best structure that you can run with. Now, the next topic we're gonna cover is why private placements beat every other advisory model. The reason why I love private placements is because transactions can get done in weeks if you get lucky. If you have the right capital partner introductions and the deal is really good, these deals can be consummated very quickly. Obviously, that depends on a multitude of different factors, but I've seen them be consummated within a few months. Very large 9-figure deals. Smaller deals can take like a week, 2 weeks, obviously depending on the level of diligence that the capital partner or the investor will be taking. But in M&A transactions or other larger transactions, these deal cycles can be months, sometimes years. So I like private placements because you can find fantastic small equity deals with great companies or debt placement deals with a company with a fantastic capital structure, and you're able to bring these to capital partners. If everything checks out, things can move very smoothly. And like I said, the fees can be in the mid 6 figures, low 6 figures, all the way up to 8 figures for these transactions. Now, in the team section, you notice I never talked about analysts. And the reason for that is because I would say one of the best hires that you can make is actually an AI engineer over an operator or an analyst, because these individuals can train models on creating your decks, on creating your financial models, your financial forecasts, and then you just have your more experienced advisors as well as your Series 79s, your legal representatives, your general counsel, and your Series 24s look over everything to make sure everything looks good. But you don't need to pay an analyst 6 figures to create these materials anymore. We live in the age of AI. Now, this also goes for all of the deal origination and all of the outreach to capital partners. We automate all of that using advanced marketing techniques and AI. If you don't use these skills, you will be left behind. And you can see interviews with the largest firms. They're all moving in this direction as well. But the fantastic thing is AI levels the playing field for everyone. It means that we can compete with massive bulge bracket banks. As a matter of fact, we have someone within our dealmaker community who started their firm literally in February, and in May, they ended up winning a mandate over JP Morgan. This was a $200 million oil and gas deal. They beat a bulge bracket bank, a firm that was literally established only 3 months prior, because they use AI, they use the marketing, and they followed this system, the advisor to principal playbook. But again, we're just talking about the advisor step here. Now, here's what's going to make you excited. Your first few deals could mean low 7 all the way up to mid 8 figures in profit for your firm. And the reason why it's profit is because the firm runs almost entirely on those upfront engagement fees. Your goal as the owner is for this thing to run on its own. You want to have the cash from the upfront fees to pay the best people that you possibly can, to pay the advisors, give them a piece, make sure that everyone's eating well, you have your AI systems in place, and that you're paying for the best software and the best data to be reaching out to companies, as well as cultivating relationships with capital partners. So if you follow everything correctly and you originate deals using your advisor's guidance, them telling you whether it's a good deal or not, what the potential risks are, and the exact strategy that should be used in order to complete the transaction, you should be able to get, say, 5 to 10 good deals on your books. And between 90 days and the first year of you running your firm, those deals should close. Now, not every single one of them will. Sometimes things will happen, market conditions, it's not the right fit, the time just isn't right. But even if you close half of those deals, you're still in alignment with what those back-end fees are going to look like. And when this happens, that's exactly when you start transitioning out into the principal phase, which is the last thing I want to talk to you about here. So how does this work? Well, I've given you just a snapshot of this entire model. If you're interested in learning more about this, like I said, there's a video that you can watch that breaks this down into more detail. You can also book in a call to speak with my team to see if this is something that we can actually implement for you. All of these steps, we've built this for not only ourselves, but also a plethora of other students that are 7, 8, and some of them 9-figure earners. But the premise of transitioning to a principal is pretty much the same as what we just did for the advisor playbook. We're going to go out, we're going to find people that have already been there, done that. We're going to borrow their credibility, their experience. We will identify a thesis. We will find folks that have already made money using that thesis, ideally have just run a fund with positive TVPI as well as DPI, and we will bring those individuals onto our team. And the leverage that we have is the fact that we just built this advisory firm in such a short amount of time. We made this amount of money, we put this team together, and in addition to that, we also have the AI capabilities, the marketing capabilities, and that truly is what will be the differentiating factor for you, is your ability to generate deal flow for yourself using key indicators that you can use your AI systems to go out and find companies that would be a perfect fit for your firm or your thesis. And then obviously, in addition to that, your ability to create your organization, your sales team, etc. Now, I'm currently pursuing this step myself, like I already alluded to at the beginning of this video. I am in R&D for my principal phase. Now, I've got several theories, several ideas on what the thesis will be. My mentor and I have had a series of conversations on this. We're also speaking to other fund managers in Vancouver. One of them managed about $10 million for a private equity fund out of Canada. I'm gonna go out and I'm gonna find individuals who I can speak to and identify what the thesis will be. It is not something that needs to be predetermined. That's what's beautiful about all of this. You don't need to know what you're going to be selling. Your advisor's experience will dictate that. They will let you know what path to go down. What you are bringing is vision, you're bringing energy, and you're bringing the ability to put all of the technical know-how together. All right, like I said, I made a video that breaks down this 90-day time frame in more detail, so you can go and watch that right now when you're done with this one, so you can go out and start executing. Conversely, if you're interested in having us implement all of this for you, I'm also gonna leave a booking link so you can speak to someone on my team about the details of Dealmaker Foundry, which is the advisory-based program that I run. Now, if you enjoyed this video, please subscribe, please like this video. If you have any questions, you can reach out to me directly, either in the comment section below, or you can reach out to me on Twitter or on Instagram. I respond to everything personally. My name's Louis Garose. I'm on a mission to help you make your dent in the universe and become a wealthy individual. I am blazing a path so I can show other individuals how to do exactly what I'm doing. I'll see you in the next video.